Good morning, everybody. It's Wednesday, July 17th, 5:25 a.m. Central Time. Grain markets are higher this morning. December corn futures up 3 at 411 and 3/4. November soybeans up 4.5 at 1047 and 3/4. December Chicago wheat up 2 1/4 at 557 and 3/4. December Kansas City wheat up 5.5 at 572.5. December spring wheat up 4.5 at 601 and 3/4. Let's start off with politics.
So the Republican Party's pivot toward trade protectionism is increasing. Senator J.D. Vance, Trump's VP pick, has been critical of bipartisan free trade agreements. His perspective mirrors that of Trump, who plans to impose 60% tariffs on goods from China and a 10% global tariff. Increased imports from low-wage countries such as China and Mexico are to blame for job losses here in the U.S., according to Vance. He has also said that the surge in immigration during Biden's presidency has resulted in lower wages.
I suppose that the Vance VP pick just kind of solidifies what Trump was already planning on doing with tariffs, because Vance appears to be on the same page. How much worse can this get for the grain markets? The soybean market's already at multi-year lows, right? It can get worse. When we had the trade war in 2018, 2019, into part of 2020, soybeans were $8 to $9 per bushel on the board. So in terms of prices, they can absolutely get worse. In terms of sales to China, they can't get worse. New crop sales are essentially zero. They can't get worse from here. They typically begin to accelerate here in July into August, and hopefully that's what we see. One of the things that is not mentioned here, but is specific to agriculture, would be this used cooking oil situation. We've ran stories on that, how renewable diesel manufacturers in the United States, they're importing used cooking oil from China to manufacture renewable diesel rather than using U.S. soybean oil. And if you have a Trump-Vance White House, maybe those imports stop. Maybe they're tariffed. Maybe the policies change. I just don't know that that additional demand for soybeans or soybean oil is going to be enough to offset the export thing. You got to remember, we've had charts before. China accounts for roughly 20-25% of all demand for soybeans grown in the United States. And if they stop buying, you could be back into a 2019 type situation. That's not necessarily a prediction. Some things have changed since 2019. Brazil has become a much bigger producer. China has signed deals with Brazil to import corn. There's things that have changed. I can't imagine that the Trump Vance White House is a bullish item for the commodity markets or for the grain markets and oilseed markets specifically. I hope I'm wrong about that, because it looks like that's the direction we're going in terms of the White House. Anything's possible. It's tough for me. It's tough for me to imagine that that's friendly. Really quick, I want to mention this. UBS was out yesterday. They said U.S. tariffs at 60% or 100% would cut China's growth rate in half. And that's pretty much what happened last time around. And I understand the goal here. Trump wants to bring back American manufacturing, American jobs, wants to stop outsourcing so much of this stuff to China. And that maybe is a good thing for the country as far as soybean futures and cash prices go. Maybe not so much.
A bit more on politics. European officials are concerned that J.D. Vance will advocate for halting funding for Ukraine. Vance has been a strong critic of U.S. funding for Kiev and has said that the war is unwinnable. He has also stated that Russia does not pose an existential threat to Europe, but if it does, Europe needs to foot the bill and protect itself. Instead of sending funds to Ukraine, Vance would like to see that money spent on schools and hospitals here in the U.S. In Vance's opinion, China is the greatest threat to the U.S., and its invasion of Taiwan must be stopped.
Ukraine, the U.S. taxpayer has sent a lot of money to Ukraine, and part of that money has went to fund Ukrainian agriculture. Ukrainian agriculture, as a result, has been able to be competitive versus the United States with regard to corn exports, wheat exports. Ukraine has absolutely captured some corn business that may have come to the United States otherwise. So this piece, if funding to Ukraine is shut off and that war ends because of a Trump-Vance White House, is that a positive? Do we pick up some more demand eventually? Yeah, we probably do. Is it enough to really move the needle right off the bat? No, probably not. But I think the concern more largely is people in Europe, people in Ukraine. If the U.S. funding stops, What exactly happens, I don't know. But that could be a roundabout positive for maybe feed grains, big picture.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Record crop potential. Record crops are coming. That's not me saying that necessarily, but you read a lot of the wires, you read a lot of the stuff that's out there, and people are starting to pencil into their balance sheets either trend crops, which is what USDA is working with, 181 corn, 52 soybeans, and some people are working with numbers higher than that. I've seen balance sheet examples where analysts are working with corn yield numbers in the mid 180s. It's not going to say it's impossible. My friend Lewis Stearns, who's an agronomist from Ohio, covers a lot of the Midwest, was on yesterday, talked about some of the initial crop problems that we saw in the United States following a wet start and what we've seen since then. I thought this was a really good update. He was on 5 weeks ago, and we did kind of an update following June and July weather. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. As I mentioned yesterday, most farmers are constantly on the hunt for information about the markets, about marketing, about crop insurance, about policy. We've got the information that you're looking for, but it's not here on the podcast and it's not here on YouTube. This is a news show. The premium subscription is analysis, it's grain marketing, it's crop insurance, it's actionable type stuff for you as a farmer. We've had some great stuff recently that you should check out. Sign up this morning. It's $50 per month. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Sign up this morning. I will forward you a copy of this morning's email, which includes our 6 most recent premium videos. There's a new one every single business day, along with all of our headline stuff, tons of graphics, all of my cash grain marketing recommendations. Check that deal out this morning.
Some areas of the central and eastern Corn Belt have seen excessive rainfall during the past week. Pockets of northern Illinois saw up to 8 inches of rain in total over the last 7 days. Rains associated with Hurricane Beryl hit last week. This week's derecho brought additional totals. The same can be said for parts of southern Wisconsin, northern Indiana, and Michigan, although these areas saw lesser amounts. The majority of the Corn Belt is expected to see dry but cool conditions prevail during the next 7 days. U.S. rainfall will mostly be confined to the south. Temperatures are expected to trend below normal for at least 10 days.
Weather market season, the days of the market trading every little change in the weather models is over. That's not to say that past weather hasn't had an impact on the crops. You've got these anomalies or unquantifiable items. Your hail event in Nebraska, your flooding in northern Iowa, southern Minnesota, this recent tornado, hurricane wind event that went across Iowa and into Illinois. We don't know exactly what sort of damage was caused as a result of that. And someday we'll find out. May not be till the fall. For now, the market sees no threat, and the days of trading these models and every little tiny change are kind of behind us typically by mid-July.
Asian buyers have ramped up wheat purchases from the Black Sea region. Buyers have purchased nearly 1 million metric tons of wheat from Bulgaria, Russia, Romania, and Ukraine for delivery during August through September. The increase in purchases is due to global prices falling to their lowest level in 4 months. Wheat prices spiked back in April after dry conditions and late frosts damaged crops in Russia. The market, however, gave up the majority of those gains in June when Russia reported better than expected yields. Increased production here in the U.S. has also suppressed prices. Since the beginning of June, September Chicago wheat futures have declined by more than a fifth.
Hopefully, this is demand entering the marketplace at lower prices, which is exactly how this is supposed to work. Lower prices should generate demand. Egypt made its single biggest wheat purchase since 2022 this week. They bought 770,000 of metric tons of mostly Russian wheat. You've also got a bunch of Asian countries kind of adding up. China's been buying some wheat. Bangladesh, Indonesia, Vietnam, Philippines, Thailand have all been booking wheat cargoes. Most of it's out of the Black Sea, I believe. U.S. wheat is not the deal on the export market the way that it used to be. We still got a decent looking book of export sales for the current marketing year, which we're only 6 weeks in, but we're average to slightly above average. We could use the business. We're just kind of a residual supplier these days. We're not a main supplier. Buyers come here when they can't get it elsewhere, I guess.
The Dow Jones had its best day since June 2023 on Tuesday. The index rose by 742 points to close at a new record high. The S&P 500 also had an impressive day, climbing 0.6% to a new all-time high for the 38th time this year. The rally was due to expectations of upcoming interest rate cuts. The 10-year Treasury yield dropped to 4.16%, down from 4.23% on Monday. The market is now expecting a 100% chance that the Fed will begin cutting rates in September.
Some of the banks are talking 2 to 3 rate cuts even before the end of the calendar year, which is crazy. It's crazy that the S&P and gold and a lot of other things are at all-time highs. The S&P is at all-time highs. Gold posted all-time highs, I believe, yesterday. The last time that happened, I think, interestingly enough, it happened, I think, in 2018 for a minute, and we've kind of been on and off the last couple of years. But 2007, right before the stock market collapsed, is when we saw that. And then we saw a big divergence. Stocks collapsed and gold went higher. I don't know that we're in that situation. This is a good tweet from Ryan Dietrich. He's a great follow on Twitter. Could the Fed really cut rates with stocks at all-time highs? The answer is yes. They've done it 20 times since 1980, and the S&P was higher a year later in each of those instances. I know when people think rate cuts, they think like, oh, there's got to be something bad going on if they're cutting rates. And this situation is totally different. They raised rates to tame inflation, and now they think they've got inflation under control, and they'd like to move rates back to a more neutral territory from what is now considered a restrictive territory. So I think so much is riding on these Fed rate cuts. And maybe you get to a point eventually where the markets, like the stock market in particular, prices in the rate cuts before they happen, and then you eventually post some sort of peak. I'm the biggest stock market bull out there, but that's one thing that has entered my mind. What did cattle do yesterday?
They were slightly higher. Feeders were an average of 72 cents higher, except for unchanged in the August contract, and an average of 9 cents lower in the back two contracts. Live cattle were 57 cents higher. Box beef was lower yesterday. Choice ended the day at 319.26. That was down 2.23, and select ended the day at 301.59. That was down 3.23.
Outside markets moving a little bit on Wednesday. U.S. dollars off. Stocks are off. The S&P's down 40. The Dow Jones down 80. Bonds are off just a little bit. Gold's up $13. Crude oil is up 38 cents in the August WTI at 81.14. Have a great day, guys. We'll talk to you Thursday.